A rough Thursday for equity markets after starting off with a triple-digit cut. Just that mild bit of recovery, the breath continues to linger in favour of the declines, although there's been a marked improvement there as well. Yes Bank clearly is your big story of the day. A 28% jump up on the stock and futures, as I see on my screen right now. The stock is back at 41.35 levels. Dish TV, 6.5% uptick there. Indiabulls Housing up 5.6%, and Z Futures as well, scaling up by about 5.5%. We're talking about Yes Bank, the clear winner today. Here's an ET Now exclusive. It seems that Yes Bank has been, the RBI that is, has been allaying fears on Yes Bank's slump. Sources from the RBI now say that there is no reason for investors to worry about the bank's stability. My colleague Nayanthara Rai joins in with exclusive details on what really, Nayanthara, is RBI's take on Yes Bank.
Thanks a lot for that. So I've been speaking to senior members of Reserve Bank of India to talk particularly about last week's massive sell-off, including what we saw on Friday. And what I've been told by the Reserve Bank is that there's no reason to worry. Yes Bank meeting all the norms very, very comfortably at the moment. That this management has tried to bring us the true picture of the asset quality. The true picture is known and the management is committed to turning it around. More than that, it seems as if Yes Bank has been in touch with the Reserve Bank as far as further capital raising efforts also go. The markets, of course, will be on wait and watch mode for that, with the share price being all over the place. It does seem the bank has committed to RBI that it will remain in fundraising mode. It will continue to raise capital as well. The RBI has blamed the recent share run on rumor mongering, quashed any possible rumor on Yes Bank being merged with a public sector bank or any other entity, saying it's absolutely false and perhaps one of the big reasons why you're seeing the share price come under immense pressure. It also seems that the Reserve Bank is aware of the pledged shares of the founder, Rana Kapoor, hitting the market. It does seem that I picked up from my sources that Rana Kapoor's stake is now indeed less than 1%.
Very important. And, again, let me qualify that. This is a completely source-based story. Nayanthara has spoken to sources at Reserve Bank of India, which is RBI, and what we've learned from RBI is that there is no reason to worry according to RBI assessment, and Yes Bank is a very stable stock. The sell-off by Rana Kapoor and his pledged shares really caused the panic on Monday and Tuesday, and Mr. Kapoor's ownership now has come down to 1%. This is completely source-based story. This is not the official version, official press release from SBI, but as of now, they are fully confident that Yes Bank will have very large, problems, which is what are been anticipating in the market. So let's connect with the managing director of Yes Bank and the CEO of Yes Bank, Ravneet Gill. Ravneet, we've told our viewers what we've heard from RBI, but I'm not getting from what RBI and what our sources have told us. I want to understand from your point of view this entire fear which market has around your ability to raise capital. Where are you on that? Are you confident? Can you reassure? Can we archive your word that within next few weeks or few days, you will be able to raise sufficient and more capital?
So Nikunj, let me start out by saying that I feel 100% confident about the bank's ability to raise capital. I have mentioned this previously as well, that there are three constituency of investors that we are speaking with. There are the large private equity funds, international ones. We are talking to a couple of the Indian family offices, and then there are a couple of strategic investors who have shown a lot of interest in investing in Yes Bank. And I think between the three put together, I have no doubt in my mind that one, we will be able to raise the capital, and second, that we will be able to raise all the capital that we need to be able to grow from here on. You talked about timing. I am very clear in my mind, and we as a management team collectively are very clear that we will not go and raise capital just at any price. The current price and the share performance has a complete disconnect from the underlying operating soundness of the bank, the liquidity of the bank, the stability of the bank, and we would want that to get corrected. And I'm sure that the markets will very quickly comprehend the fact that the recent drop in the share price had nothing to do with the operating metrics of the bank. And as the share price picks up, we will, further expedite our capital raising efforts. Obviously, as you mentioned, we have kept the regulator very closely informed about our efforts to raise capital. They have been very, very supportive, as indeed has been Ministry of Finance. And again, I would like to reiterate once and for all that I feel completely and 100% confident that this capital will get raised.
Next.
Yeah, absolutely. What a marked recovery coming in on Yes Bank. I think the clarification that you made on yesterday, Ravneet, it being a market holiday got well absorbed by all equity players. The fact that, now all the pledged shares have been unloaded, I think is a big overhang lifted from your stock. Having said that, Ravneet, now that the stock is back above that 40 per share price, what according to you is the fair value where you think you could raise capital?
So it was a known fact, and I think it got more widely disseminated in terms of that if you start seeing when the pledge got invoked and the share started to get sold, the share from that stage to now literally halved, and I think. Over a period of time, and this was a massive overhang as far as the market was concerned, in terms of that what if the pledged shares were to come into the market and the oversupply could break the back of the stock, which in some sense happened. But what is very heartening and very gratifying to see is that the market absorbed that very quickly and was able to segregate and isolate the reason for the drop in the share price. And we had an analyst call this morning where we provided more perspective on that in terms of all the objectives that we had set for ourselves at the end of the last financial year, in terms of which businesses we wanted to grow, where we wanted to invest, what we wanted to do with the asset growth, what we wanted to do in terms of reshaping our liability profile, building some of our flow businesses in a more robust fashion. And we did provide some directional guidance with respect to how those businesses are growing. And I think which has obviously given a lot of comfort to the market. Liquidity has not been an issue for us. There was obviously some concern with respect to internet banking being down, but that I think was a system-wide phenomena. I think coming out of issues with regard to some of the service providers, as well as the sales that the e-commerce companies are having, which led to a lot of load, and the system not being able to take that. All that has got restored, and I think depositors and investors are now feeling very comfortable with the overall soundness and stability of the bank.
You're not answering my question. I asked you, what do you think is the fair value for Yes Bank share price?
We all know that what the book value of the stock is. We've had a lot of reports subsequently, some media reports, some research reports, trying to estimate what is the size of our stress book, what is our exposure to certain counterparties. And I have to tell you that many of these assumptions that have been made or determinations that have been made are factually incorrect. And I do feel very strongly about this issue that one can write so casually about institutions of public trust, which effectively banks are. I think what the book value of the stock is very clearly demonstrated. But I would like to step back and just in the interest of answering your question, also say another thing. I think financial services will undergo a very significant change going forward. And one of the things which investors and analysts should be very mindful of is that which are the banks which are really future ready to be able to embrace the future and be able to harness it. And I would like to believe that in that sense, there isn't another bank in the country which is quite as future ready as Yes Bank is. I'm happy to go into more details with respect to how we will adapt to the changing landscape, and how we will benefit from that, from a cost perspective, from a revenue perspective, from a footprint perspective, from a client acquisition perspective. And just to be able to put those numbers into context, people talk about degrowing, and people talk about slowing down and being in consolidation mode. only in the last quarter, we added 180,000 new clients, which is the highest ever we've done. And in terms of new fixed deposits to the bank, we were up 39% quarter on quarter. I think what that shows is two things. One, what we had talked about, making our liability franchise a lot more granular, and second, to be able to demonstrate to this to everybody that as far as depositors and clients are concerned, I think their faith in Yes Bank remains unshakable. So what should be the right price for Yes Bank? Not for me to say, but certainly the current price is not anywhere reflective of even the franchise value of this bank.
I need to understand from Mr. Gill is the following. You raised capital a couple of weeks ago and it was 80 plus. Can I say that you're open to raising capital below that? Or you would say, look, that's a threshold. I think that's a fair price for Yes Bank. We may wait for the stock price to stabilize and then come back in the market to raise capital.
So fair point, Nikunj. I think we'll be very sensitive, to existing investors and the price at which they have raised stock. So I think that there's absolutely no question about that. Equally, I think what we need to do, and I think all stakeholders, are absolutely united in their perspective on that, is that we should do whatever is in the best interest of the bank, and that in many ways will determine the timing and the amount of capital that we end up raising. But as I said earlier, two things. One, we will not raise capital at just any cost. And the second is the bank over 2 quarters has very clearly demonstrated the ability to be able to accrete capital organically. And I think we have a lot of reserves, on our balance sheet where we can dig deeper and continue to accrete capital organically for as long as we think we need to, and when we think the price is right for a dilution. Having said that, clearly from my perspective, the capital raise is the #1 priority. And we will look for the right opportunity to be able to go out there in the market and raise the money that we're looking for.
Mr. Gill, good morning. Now, you're adopting the approach of conserving capital to grow the book. Can you just give us some sort of an indication as to where you see your overall book growing, what size that you would be comfortable with, and what the trajectory is here?
So again, I think in the last 2 quarters, what we've effectively done is, scale back our wholesale book somewhat, and then be able to put that more into the more granular, more flow businesses like retail and the transaction bank, both of which have registered very good growth even in the quarter that has just ended. So I think it's been more of a question of calibration in terms of making our overall balance sheet a little more granular. And clearly the thing that has been the overriding factor with regard to our strategy over the last 2 quarters has been to be able to conserve capital, which we have done. But my own sense is that once the capital is here, we should very comfortably be growing in the 20s.
Mr. Gill, when do you think the turn for Yes Bank will come? I mean, I'm not talking about a specific number. I understand and I respect that you're in a silent period, so we won't get into specifics. But when I look at turn for banks, in my book, the turn is when bad loans, they start becoming good loans. A lot of banks have started seeing uptick in the recovery process, and that is what I think we should focus on. What's happened in the past, I can get into it and we can endlessly talk about it, ye kyun kara, wo kyun kara. I'm not going there. Bad lending has happened. That's something which is everyone knows, but that bad lending could start becoming good lending if the economy turns. How far are we away from there for Yes Bank?
So I think that's a very good question, Nikunj. So I think one of the things that the bank did in the past and did very successfully was a lot of asset-backed lending. Now, when leverage is low and credit markets are easy, disposing, monetizing assets becomes a lot simpler, and to that extent, you can, service the debt. But in an environment that we have been through, I think that the whole process in terms of recovery and resolution has been slower than anticipated. I'll be the first one to admit that. But I also get the sense that, with the announcements that came on the back of the tax cuts from the Ministry of Finance, I think has completely changed the headline as far as India macros are concerned. And it is my very strong belief that, the government is going to become a very big facilitator and enabler to make sure that, the macros recover very quickly. And when the macros recover very quickly, a lot of the issues that we are facing with respect to liquidity in the markets, that will change. This is very, very critical from Yes Bank's perspective, because as I've often said, that unlike some of our competitors who went through this cycle and were essentially caught up with a very large stress book which was very granular in nature or which was very sectoral, cement, steel, power in nature. In the case of Yes Bank, it's a question of just a handful of very large exposures which are currently facing illiquidity. So I think the improving macros, and which I now certainly see have started to show an uptake, will enable liquidity to come back into the system, and that remains one of the key objectives for both the regulator as far as the and as also the government, and should speed up resolution. So although in the quarter that has gone by, I think the recoveries were slower and the resolutions were slower than what we may have anticipated or expected, but I expect that to pick up a big pace, pick up a lot of pace in this quarter. Having said that, you asked the question in terms of when does the turnaround happen. My sense is that that bounce back has commenced as far as Yes Bank is concerned.
Okay, just give us a perspective. We've been talking about how now overall we're seeing technology at our fingertips. We had some commentary as well from Rakesh Junjunwala about digitization and the fast-paced growth of technology. Give us a sense as to how at the bank you're adopting all of this.
So I did watch actually, Rakesh speak about, his views on technology and the fact that, in some cases valuations have run ahead of themselves, and that he sees that, changing the global landscape fundamentally for businesses, not just financial services, but that could potentially take time. I think, the way we are looking at it right now is that in financial services, the single biggest and the most important thing really is how do you assess and manage risk, and perhaps more than in any other industry. And what we are now beginning to see is that digitalization, the entire data aggregation with the right analytics in place, is playing a huge role with respect to that. So if you see the fintech boom that's happening in this country is really being built on very robust risk engines. So if you see some of the most successful fintechs in the country, that's what they've been able to effectively do. What is that enabling banks to do? That's enabling banks to manage risk in a more real-time online basis. It's enabling them to embrace client segments and business segments that they have historically stayed away from. It is bringing down the cost of client acquisition, simply because now you don't have to build large brick and mortar branches and all the capex and opex that goes with that, and that a lot of your SME, MSME retail strategy could going forward be built on digital. So why is Yes Bank differentiated from a lot of the competitors? The reason for that is, first and foremost, I think the bank was an early adopter and invested in technology ahead of time. Second is that as the world moves more to open source, leadership in technology is not just going to be a function of investment, it's going to be a function of building smart partnerships, and some of the partnerships that the bank has built over a period of time is just absolutely outstanding. Third is, if you see operating systems, right now the only bank in India which is operating on Hadoop is actually Yes Bank. The ability it gives to you in terms of throughput and analytics is multifold over any other system, and right now we are the only ones with that, and to that extent we are, for many of the aggregators, we are now becoming almost a credit bureau of sorts. So they anonymize the data, pass it on to us, and we provide the credit metrics around that. So I think that is very critical. But the most important thing, which is the fourth point I'd like to make, is that if you see banking in India historically, I think given the size of the market, how disparate the market is, building market share has been very slow. I think one of the things that technology will change, effectively speaking, is that winner will take all. And I think if you are ahead of the curve and you are on the right side of the digital divide, the ability to grow market share in a manner which is much more secure, whether it's from a KYC, ML client onboarding perspective, whether it is from the point of view of the branch network, whether it's in terms of risk assessment, whether it's in terms of all the processing that happens, I think will become much more robust, much quicker, more time efficient, more cost efficient, and I think the point around winner take all will become a reality. And if I see it from, if I take a very composite view on all these factors which I just mentioned to you, my sense is that right now, there is no real competition for Yes Bank.
That's a strong message there, Ravneet. Amen to that. My colleague just reported, and I'm sure you managed to catch that conversation as well, that RBI sources are indicating that there is no reason to panic when it comes to Yes Bank's stability. Her RBI sources also indicated that Yes Bank is very much stable. It's only rumor mongering that Rana Kapoor's pledged shares, and that was what led to the slump. Pretty much what you're saying. And also that it's only a false rumor that Yes Bank is being potentially merged with another PSU bank. If you had to really use this platform to send a message out to the regulator along with your shareholders, Ravneet, what would you like to say?
So if I had to send out a message to the regulator and to the government, the first thing I would like to say is express my gratitude. I think it's been just incredible how supportive the regulator has been, how supportive the government have been at the highest levels. They have all said to us very clearly and unequivocally that we'd like a very strong, independent Yes Bank. We want Yes Bank to come out into the market, build market share, show a lot of credit appetite, do a lot of lending. That is and growth is something that Yes Bank has been historically known for. They want the bank to be able to assume that character all over again. So they have been very, very supportive, and I think I did pick up the feed with respect to the channel saying that sources from RBI told them that the bank is very stable and very liquid. If you go back to the media release that we made yesterday, it was basically reinforcing those messages. I mean, in an environment where actually most banks have seen a decline in CASA, our CASA quarter on quarter actually went up from 30.2 to 30.8. Our granular retail deposits went up. I mentioned to you the increase in our fixed deposits, the number of new accounts that we've opened. I think by and large, depositors and clients have been very supportive. I think they see that the bank is absolutely sound and safe. It's unfortunate that there's been so much commentary and very irresponsible commentary on social media. So the only point other than gratitude that I'd like to bring to the attention of the regulator and the government is that they should take a much stronger view, and some punitive action should get taken for sources which comment so irresponsibly and so casually on banks.
All right, you're sending out some fairly positive messages, and I'm sure investors and shareholders alike will be mighty pleased. Appreciate you taking the time out, Ravneet, and talking on a range of issues regarding Yes Bank.